Although 2023 was a positive year for Matco's Diversified Income Fund with a return of 6%, the first half of 2024 has presented some challenges. Strong economic data, stickier inflation prints, and resilient economic activity delayed central bank rate cuts. Matco's Diversified Income Fund returned negative 1% year to date. The rest of the year will be influenced by these key factors: inflation moderation, economic deceleration, interest rate reductions, and political uncertainty. We do anticipate further disinflation through 2024, with inflation moderating closer to the 2% target. Although inflation was sticky through the first half of the year, the shelter component is expected to decline in the second half, particularly here in Canada as well as in the US. Commodities remain unpredictable, but the overall outlook for inflation is far more balanced than it has been in the last 2 years. Global economic growth surpassed expectations last year, despite higher interest rates and tighter financial conditions. However, prolonged higher interest rates are likely to slow economic growth in the second half of 2024. The longer those rates stay elevated, the more pronounced that impact will be. This is already evident in rising loan delinquencies and softer consumer spending. Now, although central banks delayed interest rate cuts longer than anticipated, the global rate cutting cycle has now begun. Switzerland led the way, followed by several other major banks, including Canada. In June, Bank of Canada Governor Tiff Macklem reduced the Canadian overnight rate to 4.75%, marking the first of several expected cuts. We anticipate 2 additional rate cuts this year, with 3 or 4 likely in 2025. U.S. Federal Reserve, however, is yet to cut rates. They're awaiting further confidence that the lid on inflation is in fact tight enough. Now, 2024 is a significant election year with over 4 billion people heading to the polls. Heightened political uncertainty can dampen business investment and weaken investor sentiment. In the US, a Republican sweep may result in an extension of 2017's tax cuts. This would lead to a new rise in bond yields. Other geopolitical shocks could also impact global growth and inflation. In an environment of disinflation, deceleration, and political uncertainty, a diversified income allocation is crucial. Recognizing that we are likely in the later stages of the economic cycle, we have adopted a conservative approach. Our corporate bond allocation as a result stands at 39% and is focused on high-quality credits with inelastic demand and very strong balance sheets. Currently, our diversified income portfolio employs a barbell strategy. What this means is we have an allocation to shorter-term corporate bonds, which is helping provide the current running yield of 4%, while our longer-dated government bonds position the portfolio to benefit from capital appreciation when interest rates do eventually decline. This strategic positioning ensures that we can navigate a range of potential market scenarios, offering both diversification and downside protection. Despite market uncertainties, our outlook is positive for the income asset class. Now, just a little bit of housekeeping. We did change the name of Matco's Fixed Income Fund to Matco's Diversified Income Fund. This is simply just an adjustment to better reflect the opportunity set of investments that we utilize within the portfolio to achieve the objectives of the mandate for the investors.